Hello, everybody. I hope you guys are having a great afternoon. It's a little ominous that there's clouds in the sky as I'm going to be talking about the economy right now. So I just got back from New Jersey. I don't have time to make an amazing video, so I'm just going to talk off my dome and get something off my chest. The economy is whacked. The economy is shot. We will be going down more. Not a financial advice, just my personal opinion. The jobs report came out. Unemployment now is 3.5 instead of 3.7%. The Federal Reserve will probably be raising 75 basis points in November. The Federal Reserve will probably increase their projected rate hikes. Like right now it's like 4.6, if I'm not mistaken, 4.4. They're probably going to raise that. There is now a major possibility that they're going to go in 5 or 6% federal funds rate. Why? Whatever they're doing just is not working. The inflation is going to go up now that the gas prices are going up. A couple of days ago, I told you that I'm going to be buying USO, United States Oil. Well, I bought a couple of calls for United States Oils. I got 3 options for those. And I'm literally up 50%, 100 something percent, and 100%. Some crazy shit like that. So you got to really pick your plays here. There's a couple of options you could do. You could sell. You could hold, do nothing. You could buy the dips, DCA. Or you could try to predict what's going to happen in the market. And I don't mean predict, buy at the best possible time. I'm talking about if you know that oil prices are going up, you can bet for oil. If you know that there's going to be federal funds rate hikes, well, then you can bet on the US dollar. If you know there's going to be uncertainty in Europe, you can bet against the euro. You could bet against the pound, which I'm doing in both cases. Also, we know the federal fund rate will be up more. We know now that the jobs report is, good for the economy, which is bad for the stock market. So we know that the Fed is going to be as hawkish as they need to be. We know that the US dollar is going to be strengthened. And we also know that interest rates for mortgage rates are going to go through the roof. So what do we know? We know Zillow's going down. We know Open Door is going down. We know that Redfin's going down. We know that ETFs for single-family homes in the United States and probably Canada are going down. Guess what? I mentioned these plays to my Patreons about a week ago, and they're all like 52-week lows. So you got to really dig deep and figure out what you want to do. The economy is not going to be getting better anytime soon, and there's a huge disconnect between America, the United States, and Europe and UK. So Europe and UK have a shit ton of unemployment, while the United States has extremely low unemployment. United States has high inflation, but not as bad as Europe, not as bad as UK, not as bad as European Union. What does that mean? United States will be super aggressive with the federal funds rate. They will keep increasing the federal funds rate, while Europe cannot afford the same thing. Europe cannot be as aggressive and have not been as aggressive and will not be as aggressive as the Federal Reserve. This is just my opinion, not financial advice, purely entertainment and education. What you guys do with what I'm saying is on you. You make money, you make money. You lose money, you lose money. Don't blame me either way. If you make, congratulations. And if you lose, I feel bad for you, but that's on you. Reevaluate what's happening. If you can get side work, do side work. The economy is gonna go to shit. We are as close to a depression as we've been since the Great Depression. The Federal Reserve needs to raise interest rates. We are currently at $31 trillion of debt. We crossed the line. $31 trillion. For every percent that's raised, that is $310 billion worth of debt. If we raise the federal funds rate to 5%, which we will be getting there, we might even go to 6%. At 5%, we will be paying $1.8 trillion. 1.8, 1.7, something like that, trillion dollars. Our GDP is like 22, 24 trillion a year. Our taxes is less. Our taxes is like, I think 12 off the top of my head. Just understand what I'm saying here. Now, we thought we are going to get around 4.6, 5% federal funds rate. Now it's a great possibility we're going to get 6 and 7s. If that happens, We are going to a depression. Make no mistake about it. We will be going to a depression. Usually, when there's a recession, you lower rates. Don't hike rates. The thing is, people do not want to work. And that's why there's very, very, very little unemployment. Thing is, right now, there's more job openings than there are people working. And it's still like a 2-to-1. For every one person looking for work, there's 2 available jobs. It's interesting what's happening with the work because not everybody wants to do every single job that they could have done before. We have a huge migrant problem. We have an open border policy. I just heard about this today because all the migrants are coming to New York. They're being sent here from like Texas, right? And from Florida, they're being sent here. We have an open border policy. What do you think that's going to happen? We have crime through the freaking roof. AMD, Nvidia, Intel, layoffs galore. This is all going to catch up. We're going to have an earnings recession. The thing is, everything that we did, essentially, think about this. We have a gun. We shot all our ammo. Biden released 1 million barrels of oil a day from the Strategic Petroleum Reserves. Well, the elections are going to happen. And at that point, neither the Republicans or the Democrats, because somebody's going to get elected or reelected, is going to care about oil. 1 million barrels a day is going to end in October. Saudi Arabia, OPEC, is reducing oil quota, reducing oil production. This is going to increase gasoline prices. Increase gasoline prices because of the reduction in production of oil from OPEC Plus and the diminishing release of strategic petroleum reserves. And we can't do any because we're literally at 60% or 40%. We had like 700 million and now we're at like 400 something million. So we could only take out so much without replenishing. There's a problem, guys. There's a problem. Also, geopolitical uncertainty in Ukraine. This war is not stopping anytime soon. Putin, at the very least, will get this through the winter because he wants Europe to suffer. He believes that he could take Europe and put them on their knees. At the same time, Putin is going to suffer. The Russian army is going to suffer in Ukraine during the winter. What's going to happen to them is what always happened to enemies of Russia. When you come into Russia during the winter, good luck. Well, good luck to the Russian soldiers. This is not going to end anytime soon. And I'm not trying to fearmonger and I'm not trying to doom and gloom. I'm honestly waiting for them to be another, bull run in a bear market so that I can buy something and sell for a quick flip. In the meantime, I'm just going to keep playing my TQQQ, my QQQs, my SPYs, and short them. I'm putting, I'm not shorting, I'm puts, not calls. Be very, very careful. If you guys can get some extra work, take the extra work. Things is going to get a lot worse. Debt is piling up through the ass, and people are not realizing this. People are still spending galore. Stop spending. Shit is going to get worse, not better. If we had normal gas production and Biden was releasing 1 million barrels a day and inflation barely started coming under control, like neutral, what do you think is going to happen now? And since gas is disproportionately, energy is disproportionately adding to inflation, yeah, we effed. It's going to get worse. I'm not telling you to buy. I'm not telling you to sell. I'm not telling you to hold. I'm not telling you to do anything. I'm just giving you my strategy. I still hold all my Palantir. I still hold all my Algorand. I still hold all my Tesla. Although I might be getting rid of my Tesla and buy later. I will not be getting rid of my Palantir because I think they're going to thrive during these conditions. I hold all of my Hedera. I didn't sell any of my Hedera. This will change, but I don't think it's going to change in the middle of 2023. I think now we're looking at the end of 2023. We'll see what's going to happen. I'm hedging my bets with shorts or puts. And I'm hedging my puts with long-term holds for Palantir, currently Tesla. I don't know. I got Tesla at a pretty good price. I'm not too much down because I was waiting for the downturn. But I think Tesla's going to get beat up a little bit too. I think the entire market is just going to get FUBAR'd. If you don't know what that stands for, effed up beyond all recognition. Tango and cash, baby. Let me know down below what you guys are doing. Let me know down below what you guys are thinking. And yeah, I'm thankful that I have my Patreon group. You know, I'm thankful for them as they are thankful for me, because I'm learning every single day. And yeah, let's see if we could see what's happening with the catastrophe of the markets and try to make some money in this downturn. I wish I learned about puts earlier. I wish I learned about options earlier. Thank you very much. Have a great weekend. Have a great evening. And honestly, try to save money. Stop spending money. And get rid of any additional spending that you don't need. Get rid of margin. I paid down like over $100,000 of margin over the last 2 weeks. That's about it, guys. Thank you so much. Sorry for the doom and gloom, but I have to be honest with you guys and give you guys my personal opinions of the market. And we're going to see what's going to happen, right? Thank you. Have a great evening.